Picture this: a bustling sushi buffet in North York. Families at tables, delivery drivers rushing in, bills printed from the point of sale system. From the outside, Osaka Sushi looked like any other neighborhood restaurant. But inside its records, the numbers told a very different story. Hi, I'm Amandeep Singh, CPA. Today, we'll dive into the case of Coco Qi and 2467769 Ontario Inc., where the Tax Court of Canada looked closely at cash sales, point of sales data, and the owner's lifestyle to decide if taxes were underreported. Here's what made this story unusual. Osaka's POS system, which was called Quick POS, gave every sale a unique transaction ID. Think of it like numbered raffle tickets, 1, 2, 3, 4. They should always run in order. But when CRA auditors pulled the data, the sequence jumped all over the place. One ID was from late November, then it skipped to late January, then back again. Even whole weeks of sales data were missing. The restaurant owner explained this by saying the internet was down, but the system did not even run on the internet. That detail stood out for the judge. Then there was the cash pattern. On the tax filings, Osaka showed about 6% of sales as cash, but when the auditors sat inside the restaurant and counted payment methods, they found a very different story, closer to 24 to 26% of customers paid in cash. And when the audit began, cash sales suddenly spiked on the books, while the debit and credit stayed flat. That timing convinced the court that cash was being shaved from the records earlier than left untouched once auditors were watching. The trail of cash itself was another red flag. At the end of each day, staff counted bills and coins, put them in a box, and then onto a safe. The cash often paid tips, wages, and supplies, but almost never made it to the bank. Yet, despite declaring income as low as $9,000 or $10,000 a year, the owner still paid a mortgage, property, taxes, and everyday expenses. The CRA ran a net worth check, basically asking, does this person's lifestyle match what they say they earn? The answer was no. The only explanation that fit was unreported income. The judge looked at all the pieces together: POS anomalies that pointed out to deleted transactions, discrepancies between POS and closing reports and sales data, and of course, a sudden jump in reported cash once the audit started. A lifestyle that did not line up with reported income as well. All of these points reinforce the CRA's theory that cash sales were deliberately underreported and then used personally by the shareholder. The court upheld the reassessments, added shareholder benefits to Mrs. Qi's income, and confirmed penalties for gross negligence and electronic sales suppression, also known as zapper penalties. For business owners, this case is a reminder that the details do matter. Transactions IDs, daily reconciliations, even the way cash is handled, all of it can become key evidence. If the story, your record style doesn't match the reality of your business, the CRA will notice. That's why at Cloudiverse CPAs in Burnaby, we act like Google Maps for income tax. Just as Google Maps show you the clear route and alerts you to roadblocks, we help you map out your reporting so that the numbers flow cleanly from POS to bank to tax return. No gaps, no mismatch reports, no surprises if an audit comes. Because when your books are airtight, your story is simple. What you see in the restaurant is exactly what shows up on the tax return. And that's the kind of story every judge, every business owner wants to hear. Thanks for watching. Subscribe for more real stories where tax law meets everyday business. If you are in Burnaby or anywhere in Canada, Cloudiverse CPAs can help keep your numbers clean and audit ready. Thanks for watching, and I'll see you in my next video. Until then, bye.